That damn thing.
It's a wrap.
We haven't even started.
We can leave. Hey, folks, thank you for joining us. He is Pete Najarian. I'm John Najarian. Our producer, Jared, ready to fire in whatever graphics we need for the show today. Thanks for setting everything up, Jared.
Thanks.
And as always, folks, again, you'll see our handles on Twitter. He's Pete Najarian, and I'm John Najarian. And if you know how to spell Najarian, you can probably find us. And again, it was a pleasure being on with Charles Payne yesterday. And had to really sort of scramble, Pete, because we're getting rain like crazy down here in Puerto Rico. So, you got to be nimble. You got to be quick. And I had to move several different times because of connectivity issues, but we got it done. And it was a riot. I appreciate everything that the folks at Fox Business did. And they've already invited me back, Pete. So bang.
Bang.
Since you're a paid contributor to CNBC, we'll have to see if they ever have you back on.
Yeah, that'll be interesting. That'll be interesting. We'll see.
Yeah, that will be interesting. Well, let's talk macro for a sec, Pete. Macro, since we're going to cover Meta at the top, I'll skip over Meta for now and just say, boy, tech earnings have not shown brightly. I mean, our friend Stephanie Link just tweeted out that IBM has been the best tech stock reporting so far. When was the last time you could say that? Wow. Most of us wouldn't even say that's a tech stock anymore, but more of just a hardware stock. Anyway, What do you have for macro today, Pete?
I'm going to give everybody another one. I'm going to say, how about the dollar yen? I think, if you are interested in seeing what's really pushing the markets around a little bit, John, we talk about the 10-year all the time. It was down pretty hard today, and it was well above 4. It's pulled back, got back underneath 4. But you look at that dollar yen and that relationship, that inverse relationship, again, that is something that's very telling. So I think we're done with that minute, and let's get on to the real stuff now. The macro's done. Now let's go to the micro.
That's right, folks. We don't waste your time with a lot of macro there. We'll dive right into some trading. Meta, META. So, Pete, I sold upside calls. I sold downside puts. I thought that was reasonable to maybe buy the stock down at around 106 or so. Didn't work out like that. It went down to 97 and change, Pete. This was just a horrific report. They dropped 12 places overnight, according to our friends at thestreet.com. They dropped down to the 25th largest company on the U.S. stock exchange, and that's not a good thing.
Well, John, the problem is that they've decided that they want to be, and this is an offense to sailors, and particularly drunken sailors, because these guys are spending like drunken sailors, and that's not even fair. I mean, the reality is all Zuck has got on his focus, and that's a problem, is just looking at Meta. He's losing sight of the core, and by doing so, the spend is there, the growth is slowing, and that's a bad combination, John, and that's exactly why we find ourselves where we do right now. I mean, this is a 52-week high was 353, and today, you just mentioned it, but we hit 97. That gives you a little bit of an idea of, hey, look, man, you can spend money, but you can't spend what you're spending right now. Obviously, you have a vision for the future, but you know what? That is in the future. You've still got to focus on the here and now, and that's the problem. In the past, I've always kind of given Zuck a lot of the props that he deserves because he built this unbelievable company, right? From a dorm room in Harvard or whatever. But the reality is, John, you've got to always keep up with what's going on. What is your core business? You got to keep the core going while you start to build out everything else. That focus is gone, and they're bleeding, they're hemorrhaging, however you want to phrase it. But the cash flow they got, it's all going to the Meta, and that's a problem.
Yep, I agree. As I disclosed to you guys at the top of this, I did buy it. I'm being forced to buy it because by selling the puts that I sold, I'm forced to buy it at basically a price of 106. And it traded down $9 lower than that. So I ain't happy about that, but I do intend to write calls against it for quite a while, Pete, picking it up, whatever, 70 some odd percent under that high. I think I'm okay, but I'm fully disclosing that's what I did. All right, Pete, what about Align Technologies? These guys make the Visalign stuff for, basically braces without having to go in and drill into your, or, put wires around your mouth. You wear this thing at night, and with a doctor's or a dentist's assistance, it straightens your teeth. 18% drop, heavy volume. They were light on profits and sales. I know you've talked about this one in the past, Pete. What would you do with Align today?
Well, here's the big problem, John, and it's not so difficult. You and I both have always approached the markets in a different way probably than most of the other folks that are out there, and I think it's the right way, quite frankly, because we're blue-collar guys in a white-collar world, and we work our tails off to get to where we want, but we also understand the blue-collar lifestyle. And what I mean by that is, we don't put ourselves on this pedestal. So what does that really mean when it comes to Align? People can't afford to do what they are doing right now, and they only have so much money to go around. So are they going to spend it right now on their teeth? The answer is no. I did this a couple of years ago, by the way. Great company. They did an unbelievable job, straightened out my teeth. It's great. Really excited about that. But John, they are slowing and slowing and slowing, and that is a huge problem. When you look at where they were a year ago, and they earned $2.87, and now they missed what was a 221 target, and they come in at 136, $1.36. Holy crap. You talk about a cascading down. That's what's happened to these guys, and it's going to take a while because, hey, I know this is going to shock everybody. We're in a recession. We've been in a recession, and these are the choices that people have to make when they're sitting there and they don't have enough money to do everything they'd like to do. That's where we are right now.
Yep. I think that's enough said about that one, Pete, but you're absolutely right. It is yet another sign. We've heard it from Google. We've heard it from Facebook. All of these companies are saying people aren't advertising as much. Those are, of course, businesses. And we've heard it from people that deal directly with consumers like Carvana and a bunch of these places that say, hey, the consumer's slowing down dramatically. Well, Pete, Credit Suisse, CS, this was a $14 stock. Obviously, one of the two major banks in Switzerland. UBS has been fine. Credit Suisse has not. And now they're basically going to do what the US did a decade ago, nearly, Pete. They're going to basically take, or more than a decade ago, I guess, with Citigroup, bad bank. They're going to basically say, let's take this junk and put it over here on the right. And then let's take what we think is still a good brand, Credit Suisse, and the company they bought, First Boston, and put it over here, give it proper funding, and then kind of give everybody a stake in that while we deal with this bad bank stuff over here. What do you think? Would you be buying this thing under $4 a share?
It's tempting, but the answer right now would probably be no, John. I mean, I'm okay. I don't need to buy the bottom. You and I talk about this all the time. We don't have to buy the bottom of something. Let's have them show us that they're going to do the right thing. They missed in every single business segment, John. When it comes to fixed income, it was down 30%. When you look at equity trading, it's only down 54%, John. And then advisory, 74% down. I mean, you want to talk about as bad a report as you could possibly get, but we don't know whether or not they're going to be able to make this turn. So I'd like to see a quarter where they start to show us, yes, we can make that turn before we have to get in. It's okay if you buy a little bit higher than it is right now, because you know what? There's a possibility that they do what Zuck has done and take their eye off the ball and slide even further. So for right now, John, I think this is not necessarily a don't touch, but I think you could pause before you have to jump onto this one.
Yeah, it's not one of those, Pete, that I think you could see, a 25, 30% pop over the next couple months. This is going to take a while. They're going to cut a lot of people. Neither of us are happy about that, people losing their jobs, even if it's mainly over in Switzerland. But they're going to be cutting jobs, and that reorganization means that this is not going to be pretty for the short term. So I'd stay away also. Yeah. Pete, Shopify, apparently one of the few positive stories. Now, we've got one coming tomorrow with Amazon. You and I might have to do a special report on Amazon and Apple. But I mean, this time tomorrow, hopefully we'll be hearing that Amazon did real well, Pete. Shopify certainly did. I mean, revenue was up 22%. That's pretty darn good. So obviously they're managing inventory and getting enough information out in front of customers. Would you buy this one, or do you have to step back from this too?
No, I actually am pretty interested in this one, John. They had 6 terrible quarters in a row, but this is kind of a good example of what we were just talking about. They did show us, hey, look, this was a pandemic stock for the most part. That's why it ran up to the levels where it was. And then it came down, and we've had 6 quarters where they just can't get it right? I mean, that's been part of the problem, slowing growth. Well, maybe, John, just maybe they're starting to make that turn. And then when you look at their revenue up 22% year over year, that at least is a decent number enough for me to say, you know what, I'm going to look at this one a little bit closer, and this could be something of interest as we go a little bit further. But it looks like to me, maybe they've made a bit of that turn. Not like a full turn, but it's the start of something a little bit better than certainly where we were for the last 6 quarters.
Yep, I don't disagree. I am a buyer of this one, Pete, of Shop, SHOP. Was $200. Was it overvalued there? Well, apparently, because you were able to buy it yesterday for $30 a share. But I do like it, Pete, at 1/7 of the recent high. Yeah. And apparently they've been doing things right finally. So yeah, I would endorse this one and be a buyer of Shop. I'll put it out there for everybody. All right. What else we'll put out for everybody is that we're going to be in Miami December 8th through 10th. So let's run the commercial, Jared, and let them know what they can expect.
Introducing our new series of intimate in-person trading conferences in some of the greatest cities in America. It's Market Rebellion Live. First up, this December in Miami. Level up your trading with help from Pete Najarian, AJ Monte, Ryan Mastro, and Bill Johnson. Miami is limited to just 25 seats to ensure every guest gets personal attention. So act now. Tickets are going fast.
All right. I tell you what, it's only room for 25. That's all we've got. So this is not anything like we're trying to, convince you to sign up and there's going to be 50 or 100 people in the room. Nope. 25 of you are all that can join us. Me, Pete, Bill Johnson, Ryan Mastro. Again, we're not sure about Mike Yamamoto, but AJ Monte, who lives in Florida anyway, so he loves it when we do these in Miami. It's going to be a great time, folks. MarketRebellion.com/Miami. You can sign up. You get hotel. We have packages that include everything that you're going to need. 2 days of live trading. So if you've never been in a room with a bunch of traders like you that are trading for a living and or enhancing their lifestyle by trading, man, it's almost a once in a lifetime opportunity, especially because only 25 of you can join us. So make sure you sign up now or you'll probably miss out. All right, Pete, I've got a real estate play to talk about for my unusual activity today. It's VNQ. That's Victor November Queen, VNQ. And 17,500 of the January 80 puts were bought. And these puts were trading for about 5% of the value of that stock, Pete. They're trading for $3.72 with the stock at 81.44. That's a big bet. 17,500 is 1.75 million shares that somebody could short at that strike price. The strike price being 80, about $1.44 under where the stock was when we saw this hitting today. So I have to agree that higher interest rates make it tougher on real estate players. And so I bought puts in this one, Pete. What do you got?
Well, I got Shopify, John, and it's interesting. We just got done talking about that one. But how about this? Going into earnings yesterday, they were buying options that expire tomorrow, Friday. They were buying yesterday, and they only bought 11,000 of them, John. They bought 11,400 of the October 28th expiring, the 29.5 calls. That was with the stock trading around 29.5, close to 30. But they paid about $1.50 for these options. Well, they did pretty well on those, John, because I saw them go as high as 480. They might even have gone higher than that, but that's a pretty nice one-day return, right? Not only did they do that, and I think a lot of those folks actually use stock as a hedge against that, but after it popped. But with the stock trading today close to 34, they were buying again the October 28th expiring, this time the 33 calls, and they were buying those just in the money, 80 cents up to $1.50. 10,000 of those traded. So you and I were just talking about, hey, Shopify, what do you think? Well, we got the earnings, we got the turn, and now we've got the options in front of us. That's why those were so interesting for me. And John, in a name like this, I don't need to buy the bottom. You don't need to buy the bottom, but we'll trade the options for sure. And these are very, very short term. So anybody who's hearing this, these expire tomorrow. So understand that. But it just shows you how right sometimes they can be. And boy, were they right early on. They were right even early today, John, when they bought those calls. They started to move up a little bit. We'll see how it all shakes out for the rest of the day. But I like what we were seeing in Shopify. It was a great heads up and saying, wow, how about this thing?
Yeah. And folks, as always, every option, unless we say otherwise, is for 100 shares of stock. Yeah. So when we say 10,000, you can throw 2 zeros on the end of that. That means they're controlling 1 million shares of stock. 1 million shares of a $34 stock. That's a $34 million potential upside that they're basically putting that kind of cash on the table, Pete. That's why you and I like to follow the smart money. Right. All right. Give us some smart money in sports, Pete, because this has become one of the most popular portions of the show, where you break down, during the fall anyway, college and or pro football. What are you going to start with today?
Well, and John, we can always hit the other sports too, but why would we do that right now? NFL is year round. College football is year round. Basketball, well, a little bit of the fall, you get into the winter, you get baseball in the spring and the summer. That's all you get. That's why the NFL is the big money. But that being said, John, I think you got to keep an eye on these Philadelphia Eagles, man. The fly, birdie, fly. These guys are absolutely on fire. 6-0, the only undefeated team in the NFL right now. And they might have got even a little bit better because they went in your old backyard and stole one of your old defensive linemen when they got Robert Quinn. This guy had 18.5 sacks last year, John. He's having a good year again, extremely aggressive, and they picked him up in a trade for a 4th rounder. This isn't a Russell Wilson where they're giving you a first and a second, and a bunch of other players. This is a 4th round pick. And this is a really interesting move, John, because they already are the number 4 defense when it comes to points against. They're number 5 defense on passing yards. They're number 4 against points against as well with 17.5. So there's a lot of different reasons why they didn't need to make this move, but you got to give the GM all the props in the world, because this is a guy who says, you know what, we're good. We think we can go somewhere. We think we're going into the postseason and maybe going pretty deep. But you know what? We need a little bit more. And they just grabbed a lot more when they got Robert Quinn. You've watched him play. You know a little bit about these guys. The old Chicago Bear. He's been there for a couple of years. What do you think about this trade?
Oh, yeah. He used to be known, Chicago Bears, as probably the best defense in the NFL, maybe of all time. Not when I was there, but just after that. That 85 Bears team, and even into 86 and 87, huge, amount of talent on that team. Buddy Ryan running the 46 defense and all that. But Philadelphia really is the one that I watch these days, and they are exciting. I love to watch the way they shut down. Doesn't matter if you're running or passing, Pete, they shut it down. And I love the idea that Jalen Hurts is playing the way he is playing, Pete, because, people probably questioned that pick years ago, but here he is fulfilling that promise. And as you said, undefeated. Enough said. All right. What about college football, Pete?
Well, this is pretty fun, John. And this one, you're going to be shocked when you hear this one. So
All
who should be the college football coach of the year? We're not even deep in the year. We got 7 games or whatever, 6, 7 weeks, depends on bye weeks, everything else. But how about Brett Bielema down at Illinois and the job that guy's been doing? Absolutely unbelievable. He just got hired last year. And last year, it was rough because he had to redo everything that they were doing. He went into the portal. He did that. They actually had one big, huge win last year that should have given people a little bit of insight into just how good this guy is. They went in number 7 Penn State, and they took them to the house. And that was a big win for them. But this year, these guys are absolutely on fire. Now, they do have one loss, and it's kind of a weird loss. They lost early on to Indiana. The problem they had in that game, they beat them up and down the field. They absolutely destroyed them. But 4 turnovers. They haven't had that kind of a problem since. Brett Bielema used to be at Wisconsin. The guy had an absolutely unbelievable record there. He went to 3 Rose Bowls. He went to a bowl game, it seemed like, every single year. John had a great winning record. He struggled a little bit when he left and went to Arkansas. Then he went into the NFL, but then he came back to Illinois just last year. Well, this year, they're looking pretty good. They're 6-1. They're playing pretty damn good. They have the number 1 defense in all of college football through 7 weeks. I think that says a lot. Whoever heard of Illinois football since Mike White was there back in the 80s? I don't think anybody, right? I mean, so it's amazing what this guy's done in a short period of time. He's got a great running back. He's got a really good portal guy who transferred as quarterback as well. But it's the defense. The defense is absolutely destroying people, and they hold on to the football, John. Every one of those offensive linemen looks like the old days of Wisconsin Badger offensive linemen because every one of them is 6'6" and 315 pounds. All 5, they look the same across the board, and all they do is they come at you like a bulldozer, knock open some big holes, and Chase Brown gets through those holes, and that kid's over 1,000 yards already as well. So I'm giving Brett Bielema Coach of the Year right now. What do you think?
Well, I don't know who I could put up against him, Pete, other than maybe the Tennessee coach. That was such a fabulous win, Pete. There were because, obviously everybody else in the country lost the hate on Bama, and in particular their head coach.
Yeah.
But I think that was an unbelievable win for the Vols last week. So I think the other one might be the Wake Forest coach, Pete. But I can't question yours. I think those would be my 3 picks. Yours, number 1, Bielema, and then I think Wake Forest for what they're doing with a program that really hasn't popped up on that many people's radars outside of yours. And then Tennessee, the Vols look absolutely phenomenal.
Yep.
It'll be a big test to come down after that big Bama.
Yeah. Well, I agree with you, John. You're breaking up a little bit here and there, so I'll just say this. I think college football, we got a great weekend in front of us. We also have, Thursday night football. You got college and pro, so that's why we're talking NFL. Yeah, we're going to sprinkle in some NBA and some NHL and some of the Major League Baseball now that we're in the World Series after 90 or 200 games or whatever they played to get here. But the real deal is, you know what? There's a reason why the NFL and college football is so exciting. Every week counts, and you cannot lose 2 or 3 in a row because once you do that, you're out. That's what makes it so exciting. But it's been a great show, John. Always fun. You do a great job, and it was a lot of fun today, as always. Folks, keep an eye on some of that unusual. There's a lot going on in the markets. We know it's going up and down and all around, but you know what? As long as you're more informed and understand a little bit better, it sure is a lot of fun. We're enjoying it every day. Have a great one.